Good evening. We start here this evening with a story that actually broke yesterday with the International Monetary Fund lifting the world economic growth outlook by 0.2 percentage points to 2.9% for the year. This move has been linked to resilient U.S. spending as well as the reopening of the economy in China. The IMF also says that it expects growth to bottom out this year, accelerating to 3.1% in 2024. Meanwhile, inflation rates are expected to be lower in about 84% of the countries, with consumer price increases slowing 6.6% this year. So what are the factors that the IMF is seeing that are impacting on the country's growth and that of the continent in South Africa as well? For that, we are joined by Max Ollier, who is the IMF country leader and representative in South Africa, to tell us more. Max, thank you very much for your time this evening. Let's start with the global economic outlook, with a number of people still asking questions since this report was released, really improving the growth outlook for 2023 globally. It does not seem to be really following what has been happening in the past year, particularly with the Ukraine and the Russia war still with us. What are the factors that you have looked at in a global scale that have led you to improving the global outlook?
Okay, thanks for the invitation to be here with you this evening. I think the two things that we did with the projections. One, we increased the projections compared to our latest ones in October. And the reasons for this is the third quarter data, which we didn't know in October, but we know now, were stronger than initially expected. So the economy in 2022 seemed to be more resilient than we had been projecting. So that's positive, including the U.S. economy. Now, for 2023, we upgraded the projection also because we have now China has lifted their zero COVID policy, and that certainly improves significantly the outlook for the Chinese economy. The outlook for the Indian economy has also improved, and our latest projections of both China and India together will account for half the growth in the world economy this year in 2023. On the other hand, it's important to note that although we upgraded the forecast, the projection for this year to 2.9, it is still a significant slowdown from last year, where the estimate is 3.4. And the reason why we expect this global deceleration is because the tightening of monetary conditions to fight inflation, combined with the ongoing war in Ukraine, are still weighing on global economy. So we expect the economy to slow down this year compared to last year, but it will bottom out, and we expect some rebound going forward, especially starting in 2024. On the inflation front, which is another one that is of great interest to people because it does affect people's lives very directly, we see inflation seem to have peaked in most countries. It's already coming down. At the global level, inflation was about 8.8%. We're projecting it to be around 6.6% at the global level again in 2023, and further easing to 4.3% in 2024. So these are very good news. However, it's important to note that even the 4.3 projected for 2024 is still higher than the levels that we had pre-pandemic. We were around 3.5%.
That is much understandable, Max. Coming to South Africa, there is a big gap in terms of forecasts between the IMF's forecast for South Africa in 2023 and the Reserve Bank, which actually forecasts for this year 0.3 percentage points when it comes to GDP growth in 2023. What do you see that we are not seeing? Because as far as many indicators show, load shedding will be the major inhibitor for growth in this country.
Okay, well, listen, let's put it. I think we are At this time, projections for South Africa, because of the energy crisis and the load shedding, are surrounded with more uncertainty than usual. These projections that we released a couple of days ago, we worked on them earlier in January. And basically, the story is similar to the global economy. We see a significant slowdown in 23. Our estimated growth for 22 is 2.6, and now we're projecting a significant deceleration to 1.2 in 2023. But there is uncertainty. You know, load shedding in January has been probably the worst month ever in terms of load shedding. But this we didn't know in early January. So I think projections for South Africa will remain somewhat a bit of the touch and go as we see whether the energy crisis is solved or some progress is made into alleviating it. I cannot comment on the SAR projections. You know, they can explain the rationale of their projections. But on our side, our call was, you know, based on the trends that we saw at the end of last year and the load shedding that we saw last year, which was still unprecedented, we thought the acceleration would be to 1.2% this year. But as I said, there is significant uncertainty around this projection, more than usual because of this issue with the energy crisis.
And on the inflation front in South Africa, what do you see in terms of this particular year?
Well, in terms of South Africa, first I would say, no, the SARB had done an excellent job. I mean, it's a very professional central bank and it's very data dependent. You know, they make the decision every meeting based on the data that they see on activity, prices, etc. And, you know, although inflation increased everywhere in the world, you see the deviation in South Africa beyond the ceiling of they have this target range of 3 to 6%. And the deviation from this range is relatively small compared to what we have seen in other emerging markets and even in some advanced economies. So they have done a very good job. Our view is that inflation in South Africa has peaked already. It's on a downward trend. It's still above the ceiling of the target range, but we expect it to be within the target range around in the second quarter, around the mid-year. It will be back into the target range. And then for next year in 24, it will be getting to the midpoint of the target range, which is what the SARB usually wants to achieve. So basically for inflation, what we have for 2023 at the end of the year is around 5.5%, but yeah, for 24 it will be around 4.5%.
Max, thank you very much for your time this evening. That is Max Ollier, who is the IMF South Africa representative.